guys? Welcome back to the Capital Mindset Show. Today we're doing another subscriber request. This one's going to be Facebook, now known as Meta. Okay, so I think the last time we reviewed Meta, it was called Facebook, or they were just going through the transition of the change. Now, before we begin, I just want to say this company is a monster company, and I was given permission, so I can't say this. It is a decently sized position within the company's portfolio. Yeah, it's what can I say about that? So, but it's a long time holding, so I can't say whether or not we're adding here or not adding here. I can only talk about myself. So I just want to first go over some of the price action more recently. We see that it's actually down from its all-time highs. It's down about 21%, and over the longer term, it's done fantastic since its IPO. So let's take a look at the entirety at 670%. So it hasn't even 10x yet. For all those people, saying stocks 10x, there you go. This one hasn't 10x, but this is a beast of a company. We're kind of going to go over some of the things that they're trying to get into. There's a reason why they did the meta change, and there's like a meme version that you might see a lot of memes about, with like pictures of apes and stuff. And then there's the legitimate reasons, and I'll kind of go over those and why you should actually kind of take it seriously. But also, they're not the only ones getting into this. But we'll go over some of the acquisitions they made and kind of draw upon you guys to figure out what it is their plan is going forward. Okay. So taking a look at the earnings presentation, we kind of look at the legacy part of the business, which is basically Facebook. So Facebook, despite, for example, my generation not really using Facebook that much, they're still growing their daily active users, which is rather insane. I think for the most part, the youth utilizes Facebook for college events and the like. But for as far as social aspects in the United States, it's not going to be as much. I think that's more of the older generation, but the youth still uses it for events. And I think Facebook Marketplace actually is really good. It basically destroyed Craigslist. For example, I bought my my stand-up jet ski on Facebook Marketplace, and I know there's a lot of sketchy stuff there, but for the most part, it was really good. So going forward, though, a lot of their growth does have to come from the rest of the world, because you see here that the United States is actually a mature market. They've actually even declined since Q2 2020. So it's not really going to be growing much. It's going to be rather stable, but the value of Facebook ads probably will go up and up and up. Okay. So Facebook monthly active users. So this is kind of a different measure. This I care less about than the daily. The daily kind of shows how sticky the platform is. I might fall into a monthly active user because I don't really go on it at all, maybe for Facebook Marketplace, but that's pretty much it. The other products that they use are, yes, I do utilize, for example, Instagram somewhat. And then there's WhatsApp. WhatsApp is, I think, the sleeping giant. Okay. So WhatsApp, we discussed, for example, about Venmo, owned by PayPal, and Cash App, owned by Square, which is now called Block. So I think WhatsApp has a tremendous amount of potential to absolutely wipe the floor with those offerings, because I know so many individuals, so many people in the world utilize WhatsApp. The convenience of having to just have an all-in-one place where you can message and pay securely is rather nice. And I think WhatsApp has a lot of potential to be monetized. They just have to execute on that. But the thing is, Facebook has all these cash cows. They're generating so much cash that it's almost like just icing on the cake at this point. Similar to how YouTube is like that for Google. Google owns Google, which is the most used search system in the world, and then you have YouTube, which is then the most or the largest platform for video content in the entire world, and they own both of those. Okay, so then Facebook kind of the same thing but with social media, right? And then I'll talk about TikTok and what's wrong with TikTok versus something like Instagram, and why I'd rather own Instagram or something akin to Instagram. Okay, so family daily active users, I don't really care about that. Similar kind of measures, guys. That's why I'm skipping over this. Okay, so revenue by Facebook. Okay, so this is the important. So while the United States is a mature market, they are also mature in the value. Okay, and then if you take a look at the rest of the world, they are more of them, but they're not as valuable at the moment. That might change going forward, but at the moment, their growth again is rest of the world. And this is just, I think, Facebook. So we're not even talking about the meta and all they're getting into. Okay. So when they say Facebook, I think it includes Instagram, WhatsApp. Net income, just a monster company. These are monster numbers. Diluted earnings per share, cool. Capital expenditure. So CapEx is rising because they're spending more on security, on however you want to put it, but like, you know, content security, stuff like that. I guess so. Their margins used to be insane, and I think their margins came down because they started hiring a bunch of people to basically watch out for content or something like that. Yeah, free cash flow is insane. Cash printing machine. I think that's pretty much it. So let's take a look at the this acquisition that they did, and it's this company was called Customer with a K, right? So basically, what it does is it allows the well, it's a competitor to Zendesk, if anyone knows what Zendesk is, but basically it allows Facebook to kind of get into other avenues where they can serve business to business, because that's what Zendesk is for the most part. And that's basically what Meta is going to be. So the Metaverse per se is not so much what people kind of envision like Ready Player One. It's actually like the newer internet, and that's what Facebook's trying to do. Okay, the newer internet. So where businesses or application solutions are going to be part of this newer way of connectivity, and Facebook basically wants to basically conquer their space, right? And that's why they're calling themselves Meta, and they're going to be doing a lot of M&A in this space to try to make those offerings. You kind of see this with, like, for example, Dropbox. So Dropbox and Drew Houston and Mark Zuckerberg are really tight. Drew Houston's company is actually shifting its sales, or shifting the ship towards making products that will fit in the metaverse. And then you might be thinking, why? If it's like Ready Player One, so that's like the meme thought of what the metaverse is. And then what in reality, what it is it's basically becoming this secondary internet in which business and commerce can enact. It's not like people just going on virtually and then just leaving the world. That some people think that it's that way, sure, but in reality, it's way more than that. It's more complicated than that. Okay, so there's a lot of companies actually going into this, and they're going to be investing heavily in what we call the metaverse, right? Facebook just changed their name to Meta so that they have the marketing behind them. Okay, and that's very important. Don't underestimate that. I imagine the mainstream media is going to be mentioning, oh, looking back, it was such a genius that he called himself Meta because of the marketing. Yeah, marketing does actually matter. And if you can get inside people's heads and they think metaverse and they think your name, that's very powerful. Okay, because you become a verb, right? So the service becomes the noun, right? So yeah, they were able to acquire this, and I think they're going to make more acquisitions. All right, on that note, let's actually go over to the model, and let's plug it in. So right now it's on FedEx. Let's go Facebook. Okay, load. While it's loading, let's go ahead and put some discount rates. So let's do a market average rate of return. They're probably going to grow a lot more than 10 and 20%. But you can kind of see some stocks are not even priced for that. I think they're going to grow easily 10%, easily 10%. And they have been doing some buybacks. And actually, I think those buybacks are going to accelerate. So we're going to reduce that share count. Oh, way too high. My apologies. So barely is going to make a dent. They have the capabilities to do a lot more. But I do also think that their growth rate is going to be around between 10 and 20%, by the way. So we're going to keep 20% on the high end. And then we're going to do 10% on the low end, because I'm fairly confident in that number. And then we're going to do some in the middle. So then 15 center and then 17. All right. So what we see here is definitely we can probably discount it quite a bit more. And at 15% required rate of return, I think that's fair. That's a 50% margin of safety. And as I can see here, Facebook is indeed a buy. If I can expect a greater than 15% growth rate, which I think is quite fair for something like this. And I do think the buyback will grow, and they might pay a dividend, right? This company is so well capitalized that we take a look at that 14.38%, not percent score on the Altman Z score. Now that's not really that applicable too much, because that's more, it was designed for industrialized companies, but you can kind of use it for other types of companies. And basically at this score, it's saying that in the near term, it's definitely not going to go bankrupt. I think it has to be below 1.7 off the top of my head. I might be wrong on that. But if it's below that number, then it's at risk of bankruptcy within the next 3 years. And it has a 97% rated accuracy for going back in the past. One of those 3%ers, by the way, was AMD, where the Altman Z-score predicted AMD would go bankrupt, and it didn't. That was actually a time to buy. But that's just a little tidbit of history about the Altman Z-score. So the model also tells me, no, this company's not at risk of bankruptcy. And I apologize. I actually forgot to zoom in for you guys. So hopefully now it looks better. But for the most part, I do like what I see here. It's not, I think if we see further weakness, it might be an opportunity to add. For me personally, I might actually add to Facebook. And I don't really care about analyst price targets, but here it is. Analysts have a price target of 400. They believe it's going to go up by 30.9%. They have a buy rating on it. I don't really care. What I care about is what I think the cash flows are going to grow. Am I discounting it adequately enough for my liking, et cetera, like stuff like that. All right, so let's actually go to the key ratios and take a look at what's going on over here. We're not going to look at the activity ratios because there's no inventory. Well, actually, technically they do have some, but it's not main part of their business. All right, this is absolutely disgustingly good. All right, sorry, use that vernacular, but yeah. So cash ratio, they can cover everything by 3 times, right? That's insane, okay? They are definitely not going to go bankrupt. And then we're looking at the solvency ratios. Absolutely ridiculous. No debt on this thing. This thing's like, wow. So the liabilities are going up because the total debt ratio is going up, but it's like nothing, right? Look at that gross profit margin. That's insane, right? This is a fantastic business. And you have your operating profit margins. That's ridiculous. Okay. I keep saying that, but it's true. It's quite true. This is one of those once in a lifetime types of businesses. These margins are insane. ROE, ROA. All right, that's very good. And let's take a look at this. I imagine, yep, their earnings quality is fantastic. It's above 1. Free cash flow margin, fantastic. It's actually growing even better. You can see here, this is what I was talking about. So they actually had higher margins in the past, and then they start spending a lot more on safety or whatever. And, because I don't understand that really. I mean, maybe I'm stupid, but like, I always thought, you could just block people if you don't really want to see what they had to say, but that's whatever. So going back here, I mean, we're looking at probably the creme de la creme, or one of the creme de la creme of businesses. And I'd say it's interesting at these prices. If it ever comes down to close to 250, yeah, that's really interesting. Actually, that's definitely, I do think there's a high likelihood this will outperform the S&P over the next 10 years. I do think so. If they return even more cash to shareholders, that'd be fantastic. Now, let me go over why I think, by the way, their products are superior to that of something like TikTok. It's because TikTok it's kind of difficult to heavily monetize something like TikTok. So for example, Instagram and other platforms that Facebook owns, they're more monetizable, right? So YouTube's very monetizable, by the way. Okay. So YouTube is a very good asset for Google. But looking at, for example, Instagram, well, Instagram actually allows businesses to draw sales, to draw interactions with their customers. And these interactions are very valuable, right? But also, like Instagram, you can shop on Instagram. So that interaction is again, very valuable. TikTok, it's kind of like the power more or less lies with the producer, and then they usually can redirect you elsewhere because the creators give you on this short little clip, and they might sponsor, and they make a lot of money from the sponsorships themselves. Same thing with Instagram, by the way, but it's more difficult to actually like set up a store page for something like a TikTok. Especially, you got to understand the difference. So TikTok is for very short attention span, quick content. I'll skip the ad, go, 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 go. Instagram kind of just easily copied that, and there's nothing really special about that. But on top of that, Instagram is more than that. It's a larger platform that, for example, everyone in the world's using. So if you go to places like Brazil, for example, Facebook and Instagram, very, very, very popular. TikTok's popular too, but Instagram and Facebook extremely popular. And for those of you who have a Brazilian family member, you may know about Big Brother Brazil, one of the most watched TV shows in the entire world. And they utilize a lot of social media. And actually, one of the reasons why a lot of people go on there is to actually develop the social media following on Instagram so that they can monetize it there. So that's something to kind of think about, right? And Instagram as a platform is very valuable. I'd rather own Instagram than something like TikTok for those reasons, right? TikTok can grow and have a ton of users, but it's more difficult, not impossible, but more difficult to monetize in the same manner, right? And Instagram, I'd say, is still quite addicting, right? Relative to something like TikTok. You still can just add on the TikTok feature. What's more valuable is like the network feature, allowing you to create store pages and stuff like that. That's very valuable, right? So, and then again, you got WhatsApp, right? And I'm just talking about the platforms that are already successful, that we can kind of depend on to actually drive that growth going forward, that they can get involved in. Like WhatsApp could become very easily another Venmo, another Cash App. It's not very difficult for them to add on that feature. And again, that's when I discussed those companies, I said the barriers to entry aren't very high. And something like Facebook can be a huge loss leader for them. And they don't really care as long as they get market share, and they just make it more convenient and secure for the customer. And then they have their other cash cows basically producing the cash sufficient enough for them to basically go on this venture, something that Block can't really do, or PayPal can kind of do it, but PayPal can't do it to the same extent that Facebook can. And so there's room for a lot of competitors, but I do think that Facebook can be very successful, or I keep calling them Facebook, Meta can be very successful. And then on top of that, I do think Meta, I almost did it again. Meta platforms can grow its metaverse to encompass more business type offerings, and then kind of integrate it more in itself in the ecosystem for businesses, so that businesses begin to use them, for example, for teamwork settings and stuff like that. But we'll have to see. But I do think that that's the direction that they're going to go. It's not going to be like, well, to some extent it will be, virtual reality and stuff like that, but not to how people think that we're going to have ape NFTs and plugging them into the metaverse. No. That's not the vision of Meta platforms. So that's the meme version. And a lot of people point to that as something that's ridiculous, because it is. It's very ridiculous, but I guarantee that's definitely not what they're going to do. So those are my thoughts. I actually might be, doing this analysis. I came in here not knowing what I'd come out with, but I do think that I'm going to be adding to Facebook. I like the proposition. I think that the valuation here is quite compelling. It's not like dumping all my money and buying valuations. It's not there yet, but it could get there. And I'm just going to start to nibble. I'm going to begin the nibbling process. I'm going to start buying as of tomorrow. Right. And then that's basically my opinion. All right, guys. I probably should do a video on Google as well, now that I mentioned them. So leave a comment down below if I should do Google. I'll probably just do Google on my own. But if you guys have any other forms of requests, it could be sector analysis requests or company specific requests, go ahead and leave them down below. I really enjoy making these videos for you. Again, I'm going to try to do more requests now, because I'm trying to help get through everyone, because a lot of people had requests, and I know that you guys are being patient. I thank you guys. Yeah, on that note, I hope you guys have a good one. Bye.